You are listening to chartingwealth.com for Thursday, the 7th of April, 2016. What did we see happen in the market? Well, we saw the total market, which is where we always start here at Charting Wealth, as shown by IYY, the iShares Dow Jones U.S. Total Market Index Exchange Traded Fund. Boy, that's a mouthful. We saw it go up 1.12% for the day. The two-day candle, which did end up closing out, actually went up over the course of Wednesday above the two-day trend line. So it is now closed above it, which is a great sign. It was below it yesterday, but it pulled up. That was the first day of the two-day candle. That's why we use a two-day candle. What do we see happening? Well, derivative oscillators continued to lose speed. It close to leveled out a little bit, but did go down just a little throughout the course of the day. We are getting closer, but not a crossover yet, although we are getting long in the tooth. We've been sliding sideways. Actually, we hit a high back. We're about at where it was. We hit a high back on the 21st, the candle of the 21st, and again, a two-day candle. The high was 102.60. The market closed at 102.77, so it was a little above that. It's sort of hard to tell unless I super blow it up. So we're a little above that Wednesday, the 21st candle. So the market has ticked a little bit higher, but that's all the way back on the 21st of March. So we have slid sideways pretty much throughout the course of that time. We're currently in an up move since the 16th of February, when the two-day chart crossed over and has continued to move up. Like I said, started sliding sideways about the 21st, but has moved up a little bit. And if we look at the intraday, what do we see going on? Well, we saw some movement up in the morning, but lots of strong movement up in the afternoon. We're still negative on the derivative oscillator. It's not yet switched back over, nor has the MACD on the short chart. But we did see a nice bump up and move up throughout the course of the day. And again, we told you to watch out for what was going on with the Federal Reserve. And of course, when did we originally see our crossover take place? Well, right there around the 30th of March. We saw the crossover on the short chart, where several people looked at positions to enter. Right around there, actually, it started rising. It didn't approach and switch over until the afternoon of the 30th. So what do we have going on now? Well, we closed above the two-day trend line on the 4-hour chart. We still don't have a crossover yet going up, but that is where we are as far as the total market goes. Now, again, let's drop back to the two-day chart. Let's take a look at SPY. And for the record, the total market was up 1.12% for the day. We see that the SPY is up 1.09% for the day. We continue to see what appear to be spinning tops the last two-day candles. Again, we did have an increase over the course of Wednesday. We do have the MACD getting closer and closer to crossing over, going down. That is converging. And we see the derivative oscillator continuing to lose energy. And it may be switching over any day now, depending on how things go over the next 2 days of the week. We do seem to be getting long in the tooth on this market, but when you're giving away free money to the banks, it continues to, you can watch the inflationary effects on just what money stands for and counts in. So we continue to see the markets rise. If we look at the 4-hour chart, what do we see? We see, very similar to the total market, a move up in the morning and then a huge move up in the afternoon. Derivative oscillator lost a little bit of its down energy. And it looks like on the shorter chart, the 4-hour chart, the MACD is converging towards the signal line, but it has not crossed over yet going up. If that does occur again on the 4-hour chart, another opportunity to potentially jump in a trade in the up direction on the SPY. But again, the caution we continue to give is things are getting long in the tooth on those, but what do we go by? We go by what the charts tell us, right? That is exactly the answer to that question. We're going to go back to the 2-day chart, look at our last index before we go to gold. That is the QQQ. What is that? Well, that is the Power Shares QQQ Trust Series 1, the NASDAQ 100. And it, of course, is my favorite chart to buy and sell, whether I'm practicing, as I'm encouraging you to do, virtually, that is, open up an account at any of the online brokerage firms, with TD Ameritrade, Options Express, Schwab, you name it. Open an account, make yourself a virtual millionaire, and start practicing with us every day. So what do we see going on? Well, the NASDAQ turned over going up a couple of days after the total market in the S&P 500 did on the 18th of February. And it has been going up pretty much since then. It didn't have as much of a sideways slide as we saw in the total market of the S&P 500. It is closed well above on the last 2-day candle, the 2-day trend line. It never closed below it, even when the candle was forming, as we saw at the close of the market on Tuesday, when both if I recall correctly, the total market in the S&P 500 actually closed on that first day of the 2-day candle below the 2-day trend line. And we don't really see that much of a convergence. In fact, it might actually be diverging a little bit. We see the MACD and the signal line continuing to move up. Derivative oscillator gained energy on the 2-day chart. The Qs, that is the NASDAQ 100, was up substantially today, 1.64%, so over 1.5% for the day. That was the strongest of the charts that we see. And if we take a look at the intraday chart, what do we see going on? Well, up movement, a green up candle in the morning and a strong green up candle in the afternoon. No down wick that I see, no down wick even on that up candle in the afternoon, getting close to crossing over, going up on the 4-hour chart. Now, for those of you who were using the NASDAQ as an entry point, of course, hopefully you got in somewhere around the 30th, somewhere on the 30th in the morning or in the afternoon, and you watched your position move up, and it started to bound back up again after a bit of a dip. We're going to see just if that continues. Again, we see the derivative oscillator losing its down energy and appears to be close to crossing on the 4-hour chart, which might be another buy-in point for folks who are looking at getting into a virtual trade on the Qs. Of course, the only thing that I tell you is we do appear to be getting long in the tooth on the 2-day chart. However, the Qs looks a lot better than the NASDAQ 100. The NASDAQ 100 looks a lot better than the S&P 500, and a lot better than the total market IYY. So let's just take a brief look, something we don't do too often. Take a look at the weekly chart. The weekly continues to show this is the biggest of the big waves we have, continuing to move up strongly. Derivative oscillators increasing on its energy. The MACD and the signal line are diverging, that is moving apart. And it's showing strong up energy at this point. So, again, whenever you're doubting what the short charts are looking like, don't ever forget to range out and look at your big charts just to see what they're doing. Still plenty of room to move up in the Bollinger Bands on the 2-day chart. Plenty of room also to move down. So keep that in mind. Now, lastly, we're going to take a look at gold. What is gold doing? Well, it was down 0.61% for the day. Gold is still below the 2-day trend line, even with that up move. Gold crossed over going down back on the 15th of March and has moved down since then. A couple of sideways slides over 2 candles on 2 different occasions, the 17th through the 21st and the 29th through the 31st. And that is of March, and big strong down candle on the 4th, and the candle on the 6th ended out with basically a spinning top, some indecision and such. But for the day, down 0.61%. If we look at the intraday chart, let's see what it is showing us. Again, the short chart. It crossed over going up back on the 12th with a strong up move in the morning, some down movement in the afternoon, and over the course of the day on Wednesday, it moved back down below the 2-day trend line, continuing the move that we see on the bigger chart. And again, range out on the weekly chart just to take a glance. We see that gold is not yet crossed over going down, but sure appears to be heading that way. So that is where we have ended up as we've looked at our charts, looking at the total market, S&P 500, QQQ, and gold. Now, we appreciate you joining us every day. If you would like more information about how to trade, well, we encourage you to go to chartingwealth.com, sign up for our daily podcast. You will receive that in your email box every day as soon as we upload it. We typically do that the night before, unless I have some kind of problem, either with technology, not loading up things, or I'm sick or traveling, then it gets out that morning. God forbid we have not missed anything delivering to you except one short vacation many, many months ago that we warned you of. So we work very hard to make sure that all of this information is put out to you on a timely basis. So go to chartingwealth.com, sign up. You'll get our How to Read a Stock Chart video, a link to that. It's a 15-minute great how-to. In addition, you'll get the charting layout that we use at freestockcharts.com. Now, to use that link, you need to go to freestockcharts.com and sign up first. It's free. You just set yourself up an account, then use the link that we'll supply in the email you'll get with the podcast every day. Hit that link. It'll open up inside your own freestockcharts.com account, and you'll have our layout there. Some folks don't seem to get it to work if they just try to load it by itself because you don't have an account. But easy to do, provided to you by the Warden Brothers. TC2000 is their premier charting account, but you don't have to have that to start with. You don't have to have it at all unless you want it. But it is nice because it provides you with timely information on the market. I love those guys. It's the best product of its kind that I know of. We do appreciate you. If you appreciate what we do, ask you to do one thing to pay us back, a little reciprocity. Go to iTunes, subscribe to the Charting Wealth podcast, and give us a 5-star rating and say something nice about us. You can also do that on our Facebook page. If you appreciate what we do and you think it's valuable, we give you a no-nonsense look at the market. We don't hit you with any advertising. We don't hit you with all sorts of glib, you hear us talk about follow the charts and not the noise. We talk about the media noise. So again, we're not in here hustling anything. All we're asking you to do is practice, learn how these charts work. They're amazing when you understand the power of them. You don't have to be anybody's fool. You can be your own fool. But what you want to do is get this knowledge, practice, learn it. It's not super complicated. It does take some work. And really, I had a ski instructor many years ago who told me when I wanted to learn to parallel ski, back before I got very good, this is about 20 years ago, he said, you just got to have some mileage, son. You just got to have some mileage. That's what we're talking about here. Get the mileage in, pay your dues, and you will find yourself understanding the markets and doing well if you just work on it a little bit every day. You can't do it all on a Sunday. Spend 5-10 minutes a day listening to us. We'll do everything we can to help you. God bless. Take care from chartingwealth.com.